Rubeela, let me start with you. Do you agree with what some of these business leaders are saying in that being as aggressive as it is, the Fed is courting a recession and maybe a serious one?
The Fed is, good afternoon, great to be with you. The Fed is actually in a very tough spot right now. You are seeing slowing momentum in the economy, but inflation is too high. And the message is really on inflation and inflation expectations. So, what we saw in the CPI data, we didn't really see any, we saw an improvement on the headline, but we didn't see an improvement on the core figures. And what we're seeing on service inflation, rents inflation, it really doesn't leave the Fed with a lot of choices, especially coming against the backdrop of a labor market that remains extremely strong and wage growth that is also elevated.
Should we be surprised, Peter? I'm going to get your broad thoughts in a moment, but should we be surprised that individuals who make a living investing and who have made a very nice living investing in a low interest rate environment, including investing in real estate, would be alarmed at the rate of increase in interest rates and alarmed that the Fed may push it too high for too long?
Yes, I guess I get your point in sort of talking their book.
Yeah.
But on the other hand, they do have their finger on the pulse of things, so they see what's going on real time. I mean, there's no way you get out of this inflationary environment in a painless way. There's no way you get the most aggressive monetary tightening in 40 years in response to the highest inflation in 40 years in a painless way. It's just a matter of how much pain that you have to sustain. How much more does the stock market have to go down? What's the extent of the recession going to be? And it's really tough to answer the questions. The question, though, for the Fed is that, okay, they're going to go 75 next week. That's probably a lock. It's what they then do thereafter, because next week's rate hike is going to take the Fed funds rate above the previous peak of the rate hiking cycle back in 2018. And that would be only the second time in 40 years that a rate hiking cycle is taking you above the previous peak, which tells me that we're now entering and now playing a real game of chicken with the economy and this very sharp rise in interest rates. And just imagine being a small business that borrowed money going into this year, floating rate. You did not budget a 300 plus basis point increase in interest rates and what that would do to your interest expense. At the same time, your cash flows are shrinking because of a slowing economy.
Yeah, no, I get you exactly on that. But I guess I want to come back before I turn it over to Contessa for a moment to your point where you said this is taking rates above the prior cyclical peak in rates. Can't you argue, though, that the situation is just completely different? You're not talking about inflation at 2% or less. You're now talking about inflation at 8%. So that the idea here is that, well, of course they're going to raise rates above the prior cyclical peak.
Oh, I agree. I'm not disagreeing with what they're trying to do. But look what broke in the fourth quarter of 2018 at a Fed funds rate of 2.25 to 2.5. I mean, the world freaked out over a very short time frame. And here we are about to go well above that, with debt levels that are well above that, with the economy and markets more sensitive today on cheap money than it was then. And that's my point about getting into dangerous territory.
Yeah,
but you're right.
Gotcha.
The inflation levels at 40-year highs is forcing them to do this.
Well, Peter, I'll just mention you sent out several notes today that run through a bunch of data points on retail sales, on manufacturing, on the Business Roundtable CEO Outlook survey and the way that that's dropped. Rubeela, when you're looking at the data and gaming out this risk of recession looming, do you think that that's a greater risk for the overall economy and where we are than inflation to keep running as hot as it has been?
I think the risk to...
I'm sorry.
Rubeela, go ahead.
I think the risk of recession, the risk of a policy mistake are pretty high. As we're discussing this, after September, 300 basis points of tightening in the pipeline. So what are we thinking about growth? We're thinking about positive growth in the third quarter. We have no idea. We cannot say with any level of confidence what happens in the fourth quarter because we are seeing slowing in momentum in household spending. That is what drives this economy.